Hello, and welcome to today's episode of Clear Charts. Today, we will be discussing the basics of trading in the S&P 500 index, as well as why it's much more preferred than trading in the stocks and how it benefits you. Before we start, it's time to answer these 5 questions. Why should you trade in the S&P 500 index instead of the stocks? Why does the S&P 500 index have the most volume in the market? How many ways are there to trade in the S&P 500 index? How much return is there on the investment? And how much taxes do you have to pay? Let's jump into the first question. Why should you trade in the S&P 500 index instead of the stocks? Well, first off, unlike the stocks, the index is diversified. It represents 500 stocks, all of which are from different economic sectors. Apple, Microsoft, Facebook, Google, Johnson & Johnson, you name it. Another reason why you should trade in the S&P index is because that index tracks 74.2% of the revenue in the US. The S&P index is also less volatile and contains more volume than any other stock or index you can imagine. In the S&P index, there's also a smaller gap between the buyer and the seller, making it a whole lot easier to buy and to sell. Want to know another cool thing about the S&P index? It's also traded worldwide for 24 hours a day. This index never sleeps, whether it be on or off the job. The next question we'll be going over is, why does the S&P 500 index have the most volume in the market? So, remember how I mentioned that the S&P 500 index represents 500 stocks? Well, those 500 stocks in the index bring in some percentage of the volume. The more volume the stock brings into the index, the higher the volume of the index itself will be. Another reason why the S&P 500 index has the most volume is because there are many different ways to trade in that very index. Which leads to the next question. What exactly are the different ways to trade in the S&P 500 index? One way we can trade in the index is through E-mini or ES. Another way is through options, though it's one of the more complex methods of trading within the index. Another way is through SPY or SPDR ETF. Today, we will be focusing on trading through SPDR ETF and ES. The next question we'll look over is this. How much return is there on the investment? Since its inception in the 1920s, the S&P 500 has had an annual return investment of about 10%. Also, for the rising inflation back then, it can range at 6%, unless we declined, the return can rise back to the original annual return. Now for the final question. How much taxes do you have to pay? Unless you have a regular investment account, which means you have a wide range of investments, bonds, stocks, mutuals, funds, etc., you have to pay taxes to the S&P 500 index. You have to pay about 15% of the taxes or less. Depending on which state you live in to file taxes, the percentage can vary each year. Now that we've gone over all the questions, it's time to talk about trading through SPDR ETF and ES. First off, we'll talk about trading through SPDR ETF, which is just like trading through stocks. First off, though, you'll need to get a stock brokerage account with any broker of your choice. The current price is $440 and the stock's price is $100. So the money requirement you should aim for is $44,000. If you achieve the money requirement, then expect the return profit to be 25% a year, which is $11,000, or the return loss to be 10% a year, which is $4,400. Now we'll talk about trading through E-mini or ES, which are basically the same thing. Now, unlike SPDR ETF, you'll need to get a futures brokerage account with any broker of your choice. Buying one contract needs $1,210, and it returns $5 with every point, regardless if it's up or down. That means if the index moves from 4,400 to 4,500, the profit gained will be $500, and if the index moves from 4,400 to 4,300, there will be a $500 loss. Nothing more, nothing less. Now, how much money do we need to make $11,000? Well, we'll need 4 contracts, which is $4,840 to make $11,000 if the S&P index moves up by 25%. Those same 4 contracts will give a loss of $4,400 if you get a loss of 10% in the same index. We can conclude that if we use the E-mini contract, we'll need $4,840 to achieve the same results as buying SPDR ETF with $44,000. The taxes on profits for SPDR ETF is $11,000, and there will be 100% on a long-term tax rate if there is a hold for 2 years, or if there is a tax rate in the case that there is a hold for less than 2 years. The taxes on profits for the MES contract is by the IRS rule number 1256, which says that there should be a 60% profit on long term and a 40% profit taxed as the rate for short term. The most effective rate would be 26% on profit. So, it's clear that E-mini is the best way to make more money by using less investment, since it is more than 200% return on your money. Thank you for watching today's episode. Make sure you stay tuned for our next episode, which will focus on how we can have a profitable strategy, as well as the pros and cons of such. If you have any questions, please feel free to ask in the comments below. And don't forget to like and subscribe for more awesome content like this. Farewell, and have a colorful and crystal day!